Revenue grew by 28% to 2798 crores. EBITDA grew by 61% to 871 crores. Again, EBITDA is 31% of.
The conference is now being recorded.
Profit before tax went up by 69% to 775 crores, while profit after tax went up by 72% to 635 crores. EPS for H1, similarly on expanded capital on weighted average basis, is 33.25. This is for H1, 33.25 versus 19.63 on old capital in corresponding H1 of the previous year. Capex for the quarter is 168 crores. H1 is 311 crores. Cumulative capex for ongoing projects which are still under CWIP, including the pre-operatives, is 1,825 crores. Financial assistance to Aleor JV for the quarter is 40 crores. H1 is 65 crores. And cumulative financial assistance to Aleor JV, our total investments in Aleor JV is 742 crores. QIP. As you are aware, during the quarter we made a very successful QIP issue of almost $100 million, rupees 750 crores. We heartily welcome our new investors. These funds have been used partially for repayment of debt and will be further used for future growth opportunities. Borrowings. The gross borrowings at consolidated level is rupees 600 crores versus 1,439 crores in June 2020. So we have paid almost 800 plus crores of borrowings. Company has about 273 crores of cash in hand. Net debt equity obviously is very low at 0.07. I will now hand over the discussion to Shaunak for his presentation on the domestic branded business. Over to you, Shaunak.
Yeah. Good evening, everybody. It's been a challenging year in the Indian market this year. I think despite all the challenges, we could clock in about 6% growth in Q2, and we closed the quarter at 415 crores of sales. For each one, we have closed at 721 crores of sales with a flat growth. Despite all these challenges, I think for the month of August, we started seeing a strong traction in our sales, and in September, we witnessed a double-digit growth. So that just gives you an indicative trend of the business. I think overall, we have been able to perform better than our RPM in all key specialty segments, especially oral antibiotics, cardiology, gynecology, gastroenterology, anti-diabetic, nephrology, urology. And what's more encouraging and endearing for us is the portfolio of the key focus brands within each of these segments are the ones which have been driving this growth. And this is what we've been working towards, and it's extremely encouraging for us in this very challenging 19-20 year. The outperformer for the quarter was by far azithromycin oral solid. We saw significant growth numbers along with a strong market share gain for azithral oral solid. To make this happen, we did a lot of groundwork in Q1 in anticipation of this happening in Q2. We see this trend continuing for the next 2 quarters at least, and our aim is to continue with these extremely robust numbers for azithral, and further consolidate our market shares in Q3 and Q4 for this brand. Another area where we saw significant improvement was the area of gastroenterology and gynecology. These two segments were lagging in growth over the last, few quarters. We have seen this, correction and improvement, and we see this trend continuing forward based on which operational and strategic corrections we have taken in 1920. So we see strong improvement in this quarter, and we expect this improvement to continue. Our cardiology, antibiotic, neuro portfolios grew a little bit better than the represented markets. However, we still see significant growth opportunities to achieve growth rates beyond the market numbers and this is purely based on our portfolio and the amount of efforts and resources we are allocating into these segments. The only area which is still a concern for us is, the cough and cold market along with the pediatric market segments. The market for these products are still in a negative growth for the quarter as per IMS data. Our portfolio have grown in line with the market. But despite all this, we are extremely confident based on our history with this segment of, pediatricians and cough and cold and antibiotics that, we'll start returning to outperforming the market, soon as the market reaches into some kind of, neutral growth category, we'll be able to outperform in this segment. So we are not concerned by it because we've been doing this performance for cough and cold for a fairly long time. And, despite the market being down, once the market comes back to some level of normality, we can come back into growth into this segment also. So this is the quick snapshot of India business. I'll pass it on to Pranav for the US business.
Thanks, Shaunak. As regards the API and the international business, both of them have had a good quarter driven by sales growth across all the markets. Our R&D expenditure was 185 crores in the quarter, which is about 13% of sales. With the easing of the lockdowns, the R&D efforts ramped back to what they were pre-COVID. We filed 7 ANDAs during the quarter and cumulative ANDAs at 198. We received 6 approvals in the quarter, including 4 tentative approvals. We cumulatively have 131 ANDA approvals, including 18 tentative approvals. We launched 3 products during the quarter, and we plan to launch 6 more, about 5 to 6 more in the third quarter. Talking about Ryzen, our drug discovery venture Ryzen had out-licensed its oncology molecule umbralisib to TG Therapeutics. TG Therapeutics had announced in the past that acceptance of this NDA by the US FDA for the treatment of patients with MZL, which is marginal zone lymphoma and FL follicular lymphoma. As per the press release, I think they're targeting the regulatory submission for the CLL indication, which is chronic lymphocytic leukemia, for umbralisib, along with their proprietary product ublituximab in early 21. Ryzen also announced last week an exclusive licensing arrangement to develop and commercialize its second oncology product, Analysts, with Q2FY21 Pharmaceuticals from China. We've put a press release out. Under the terms of the agreement, we'll receive commercial milestones up to 149 million, as well as double-digit royalties on net sales. Analysts, as you may know, was also in the past granted fast track and orphan drug designation for the treatment of T-cell lymphoma by the US FDA. The international formulations business grew by 21% to 779 crores for the quarter and 1550 crores for the first half. The US generics grew by 8% to 582 crores for the quarter and 33% to 1177 crores for the first half. Last year Q2 was also an exceptional quarter, so we're happy that we've surpassed the performance. Ex-USA generics continued its robust growth and grew by 84% to 197 crores for the quarter and grew by 73% in the first half. API business has had a very good Q1. It had a good Q2 as well, and it grew by 29% to 263 crores for the quarter. It's been a very good first half for the API business as well. So by and large, all the businesses have been doing pretty well, domestic as well as international. We're pretty happy with the performance, as well as on the back of the massive capex that we are on the last stages of. However, there have been a lot of questions from our investors on the sustainability of the US business, as well as the impact on the EPS once operating expenses of the new plants, which are currently capitalized, starting in the P&L. So though it's been our consistent practice not to give a guidance, we thought of doing a one-time deviation and give you some broad understanding of our earnings. I think this is a one-time guidance, and we don't intend to give it on a regular basis. We will also not get into an itemized discussion, and I hope the audience would respect that. The company has had a satisfying performance in the last 2 years on account of disproportionately high spend on R&D, as well as expanding our capacity and capability. Barring unforeseen circumstances, we are guiding to an EPS of rupees 60 per share in the current financial year. As regards the next financial year, FY22, there will be an additional expense of 450 crores hitting the P&L on account of the new formulation plants. In spite of this increase in operational expense, we expect an EPS of rupees 50 per share in FY22. We expect the increase in revenues in FY23 as the new capacity start, but we're not giving an EPS guidance for FY23 as it's still a way off. I hope the above gives an indication of where we see the business moving and our thoughts on the same. Today has been a little more detailed opening statement, and I open the floor up for Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vishal Bhatia from Aviva Insurance. Please go ahead.
Thank you for the opportunity. There are a few questions. Pranav, we appreciate the guidance and we do respect not getting into too much details, but some qualitative assessment, some qualitative insights into what is the basis for rupees 60 in FY21 would be very helpful in terms of international API and domestic.
Mr. Baid, would you take that?
Sure. So, no, yeah, I understand, but you see, we have already done 33, and based on our understanding of the business, the orders, the market situation, we think that barring any unforeseen circumstances, 60 should be a good reflection. This only, the whole objective of giving this guidance was to allay the fears of some investors that how much of business is sustainable. So we are actually making a statement that most of the business is now sustainable and stable.
Okay, and just to elaborate a bit on this, like 4.5 billion is the additional expense in FY22. What is the additional expense that you considered for FY21?
So in FY21, there will not be much of, we have not at least considered much that the plants will be commercially, I'm talking of new plants.
Yeah.
Will be commercially operational because the plants will have to be audited first by the FDA, and obviously after that we must get an NDA or those approvals, and then only we can start the commercial production. So we have not really factored anything in FY21.
Okay. And just one question, and for the new plants, for which of the facilities have we invited US FDA for pre-approval inspections?
Oh yeah, we have been doing filings from...
Right now, we've done filings from the F2, which is the oncology facility, as well as F3. We have some FDA gold dates also coming up. But I don't know, this is something that I'm not sure how the FDA is going to come. The filings are pending with them. Or how, because due to COVID, we don't know when they're going to come because it's a new facility, so they will have to come for a physical audit. So let's see what that happens over there.
Okay. I'll come back to the queue for more questions. Thank you.
Thank you.
Thank you. The next question is from the line of Shweta Jain from ANS Wealth. Please go ahead.
Hi, sir. Thank you for giving me an opportunity. So a couple of questions. First one, we reduced debt this year. Do we have further plans of reducing debt in this year and next year?
So actually we have repaid almost all of our short-term debt. Now it's only long-term debt which are not due now anymore in this year. So these will be repaid when the due dates are there.
Okay, great. That helps. And so just want to know, okay, we have seen our US generic and API business grow, but if I look at it on a sequential basis, our US business has declined by 2%, as compared to Q1, and API has normally it's been flat. So can you throw some color around it, sir, as to what was the reason?
It's very tough to look at the business on a sequential quarter-on-quarter business, especially if you see the US generics last year or the last 2 years have had exceptional growth. So we've been maintaining that business and we've been stabilizing it. Sartans is one area where we had a lot of business as we get new competition. So what happens is you have new competition and you have new launches. So as we keep increasing, adding more launches, so we'll hopefully keep growing, and that's why we've given the guidance for next year. API business as well. First quarter was an exceptional quarter because of the COVID-related issues and a lot of supply chain opportunities. So that's one of the reasons.
Okay. If I just like even if I look at the API from a 4-year CAGR, we are clocking like close to 3%. So how should one see the API business going forward? If you can throw some guidance around it, so that would be great.
So, So API business, actually, we have not been able to make much investments in API for adding capacities for 2 reasons. One is we were focusing on completing our OSD projects, injectables and the new OSD plant. Second, getting permissions for API was also a little tedious and time consuming. Now, fortunately, both the things have now come into our favor. The formulation facilities are all ready, and government is now more liberal in giving, or I would say environment ministry is now more liberal in giving expansion permissions because they want to have more of Indian API manufacturing. So I think now we are also making investments in API, and we see a good growth opportunities for API even from business perspective.
Okay. So if you can give, I know normally we don't give guidance, but if you can just give some guidance in terms of API business, what kind of growth are we looking at from a 4 or 5 year perspective, sir? So is it going to be like double-digit growth is what we are targeting from a 5-year perspective in API?
5 years is a long time.
We don't give a guidance. Only thing I had said in the last call is the first quarter was good, and we hope to see that kind of momentum continue through the rest of the year as well, and that's why you've seen a decent quarter 2. But we haven't given long-term guidance, so I'm sorry about that.
Okay. So just one last question, if you are comfortable answering this, with respect to the expense that we've given a guidance of booking of 450 crore of expense in FY22. So can we assume that is the bulk of the expense booking is going to happen in FY22, and then from 23-24, like just want to understand, is 450 a bulk of the booking already will happen in FY22?
No, this is a bulk of the, I didn't understand. I mean, this 450 crores will be additional operating expenses, depreciation expressed on the new plants.
Right.
So that would be recurring every year with small increases or decreases.
Yeah. So from FY22 onwards, that means can we assume 450 crores will be an additional, that will be the new base, but that will be only for the new plant, sir, right?
That will be only for the new plant. All our existing expenses will continue.
Okay. That helps, sir. Okay. Thank you so much.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Good evening. Just understanding this Sartan opportunity better. So, as you mentioned, some competition is coming. So, have we seen some moderation in volume and prices, and despite that, we've been able to see US, flattish or still strong, and same is the case with API, or we would see the impact from Q3 onwards?
So for the Sartans, as I said in the last call, that there have been entrants coming in and they've been picking up business. Also, the Sartans there's good 15 odd products, right? And so some people have got more strength in one or the other. So there have been some price adjustments. There have been some market share increases, but by and large, it's pretty stable. A little bit erosion keeps happening as per normal. So we've grew, in spite of some erosion, there have been some other opportunities as well, and some new launches. So that's what we are seeing in the market. As regards API, sorry, I didn't get your question.
No. So that's what I'm understanding. Like, so there is no incremental pressure that we can see in Q3, or so whatever pressure of incremental competition is already baked in Q2 numbers. That's what I'm trying to understand.
Yeah, it's there. I mean, again, you never know. This is something I can't predict. If someone really drops prices or someone goes up the market, then there would be, yeah.
Okay, perfect. And secondly, on the kind of launch and approvals you're expecting for this year and next year, if you have said that, maybe if you can repeat because I missed the opening comments, if that is okay.
Yeah, so I think in the first half we've launched about 6 products, and I think for the next half again we'll have at least 10 to 15 launches. So we'll end up at about 15, 20 or something like that for the year, and similar next year as well, maybe even higher.
Okay, because the question why I asked is because the kind of approvals we have seen of late, these are the smaller ones. So we are going for launches for most of it, or and you are expecting some meaty ones also, or these to start with, these would be all smaller launches and approvals?
I think it's a combination, Prakash. And to be honest, I don't know who else is going to launch and when. We have some interesting launches coming up this quarter and for the rest of the year. And next year onwards is when hopefully we'll see some launches coming out from the new facilities, from the injectables.
Understood. Fair enough. And lastly, your take on the volume offtake and pricing in the US markets. We have seen some, supply chain improving, but in general, would you say volumes have increased, or it is similar to last quarter and same with pricing in general?
Generally it's the same. I don't think there's much change. As I said, sartans, yes, there is some little competition, but by and large it's been okay.
Understood. Fair enough. Thank you so much and all the best.
Thank you. The next question is from the line of Anmol Kanchu from JM Financial. Please go ahead.
Yeah, hi. Thanks for taking my question and congratulations for a superlative quarter. It was fairly well diversified. So 2-3 questions. One is that, we expected that a lot of costs related to staff and travel, etc., would come back this quarter, given that this is a fairly more normalized quarter with some of the activity kicking back. And that doesn't seem to have happened. Any particular reason for that, or this is on an annual basis, this is the new number that we should be looking at, or some of the cost savings that might have happened along those lines are more permanent in nature?
No, not really. I mean, if you look at it, Anmol, if you look at employee cost, if you look at some of the other costs, the costs have gone up as compared to the immediate preceding quarter. So I don't know whether you are comparing with June quarter or September previous year. It has definitely, the costs have definitely gone up beyond the June quarter. Some of those travel, promotion have really picked up. Employee costs have gone up. R&D costs you would have seen has gone up. So, I mean, we are almost at a pre-COVID level as far as expenses concerned.
Right. No, I was just wondering if there was any, any pent-up costs which would have been incurred this quarter, but that doesn't seem to have happened, and that seems to have aided the case of margins, because margins have been very strong. So that was my first question. Second question is on API and ROW. We've again demonstrated very strong growth. Just trying to understand that what is driving in particular the growth in these two segments, and where are we on capacity regards these? Because as you said, that API seems to be emerging as another interesting area of opportunity. Do you think our capex mix could change, or we are full capacity? Just trying to understand some of the drivers around these two segments again, which have recorded really strong growth this quarter.
So the ROW business, as you know, it's only the few markets that we focus on: Europe, Australia, Canada, and we work through our partners in most of these markets. And we had supply chain issues in the past. I think that's gone through. So I think with better supplies, our partners are picking up more share, or they're able to supply better in the market. So that I see the trend continuing for the rest of the year, and hopefully next year we'll slowly start adding to this business as well. As regards API and capacities, yes, we've been constrained with capacities because it's been really tough expanding due to bureaucratic permissions. But I think we're through. We've been doing incremental investments in API capacity as well as part of our ongoing maintenance to debottleneck. And I think we should be okay moving forward. It's a work in progress. There is some API expansion already underway.
Right. Thanks, Pranav, for that. And one question on the big picture U.S. market. So, for example, if you look at F22, most of our capacity will be online. I don't want to labor over the certain opportunity beyond a point, but if you look at 3 years out, do you think we are kind of now well set to take this sustainable run rate next level? And how is the 3-year picture looking from a U.S. opportunity standpoint and landscape standpoint? So what would FY23 turn around on the back of these new capacities look like from a U.S. top line run rate? I know I'm not looking for a specific number, but any directional color would be helpful.
So it's again, it's not giving me a guidance per se, but with the new capacities and more importantly capabilities coming up, the U.S. market looks interesting, definitely. As I've said in the past, can we envision going to 400 or 500 million kind of revenue? Yes, definitely. I think that's what we would aim to go at in the next 3 years, 2-3 years or so.
Thanks. That's helpful. And one last question before I get back into the queue. Shaunak, congratulations on a spectacular turnaround, at least sequentially on the domestic business. Just trying to understand that if you look at this new base that we have on the domestic business now, how much of that, when you disaggregate this across therapy areas, how much of this would be attributable, to some one-time demand drivers versus some of the structural changes that you took in past, 24 odd months to cut the tail and many other things to rationalize portfolio and drive from a new base? And to that extent, how do you feel about the growth prospects of this portfolio from a 2-year time horizon?
Okay, so the one-time opportunities, like I said, with azithromycin oral solid, I mentioned outside of that, there are no other one-time opportunities. Also, if I could take a more composite view, like I said, this azithromycin oral solid, it's not a one-time opportunity, but a heightened demand for it. And being the leading brand in this, it is definitely we've been able to gain the good market shares in this segment. So if I answer your question more from a market share point of view, this additional gain in market share from azithromycin solid, will it go back down to pre-pandemic levels? No, I think we'll maintain this market share and we'll actually get this market share to grow beyond that also. So that's one way of looking at it, though it doesn't answer your question completely. If I look at the net portfolio, I think there have been plenty of areas where we've been hammered and the market has got hammered. And I think despite that, we've been able to kind of grow stock. What I expect going forward is that if the azithromycin growth numbers do tend to moderate out a bit, I expect that the cough and cold portfolio as well as the balance of liquid or antibiotic portfolio, which is also a big chunk for us, I expect to pick up on those areas, which at the point is a bit of a beat for us. So I think that net going forward should be kind of even out.
Thank you. That's helpful. But just one last one, if I can squeeze in. As a consequence of COVID, what we're picking up from various industry sources, at least domestically, is that there's a lot of change in marketing strategies and so on and so forth. So do you see a consolidation of incumbents across products and therapy areas and, wiping off tail because some of the practices of, MRs visiting doctors, etc., seem to have suffered, and a lot of people allude to the fact that it could be permanent, and where does it position our portfolio from a, again, 1 to 2 year standpoint?
So I wouldn't want to make a broad-based comment on this. The only thing I can say is if you look at the growth numbers and we've been tracking growth numbers of top 20 companies to the top 30 companies and around 30 to 100, 100 to 150, as you see the growth numbers, if I split the business up, I think definitely growth from, companies from 50 rank onwards, I think there's definitely been a large market share loss in those companies. So that trend that I've not seen the trend slow down or come around. So, as long as COVID is around, we expect that trend to continue in that direction. In regards to marketing practices and medical reps meeting doctors, I mean, our view is that, we've been able to normalize that now. And, it's just that it takes a little more effort to meet doctors compared to how it used to be. A lot more planning is required, a lot more time and effort to kind of plan these doctor meets out, and also the relevance of a meeting. I think as long as you have some value add to the doctor in these meetings, doctors are more than willing to meet medical reps from the industry. So that little change we've seen, but I mean, I wouldn't say it's dramatic in nature. So I mean, it'd be too much for me to say that the industry is going to change overnight and a lot of incumbents are going to get wiped out. I think that's an excessive statement in my view.
Thank you. That's helpful, and congratulations once again for a great quarter.
Thanks.
Thank you. The next question is from the line of Bharat Celly from Equirus Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on good set of numbers. So just wanted to understand your guidance much more in detail. So just from the perspective of new launches, we have been guiding around 20 ANDA launches every year. So how many of those are going to be towards high value, and how much are going to be more like a commodity product launches? I would say relatively lower contributors.
So, Bharat, we don't guide on the product differentiators, what is high, what is low, because in a sense, we also don't know what's going to happen, how much competition is going to be there. So we don't guide on that. Okay.
Understood. And so we have been we have been a bit apprehensive of price decreases in sartans, and this is something which we have been alluding that it can happen somewhere in second half of FY21. So when we are giving a guidance of almost 60 rupees earnings and after that 50 rupees earning in FY22, so are we building in lower pricing for sartans within that guidance, or we are expecting a stable?
So again, it's a combination of the new products and the new launches we have and the erosion that we'll see across the board, not just sartans. So with our comfort in the business, this is what we're guiding at.
Understood. And Baheti sir, there has been a sharp reduction in receivable as well as inventory days. So is there any one-off or something you can call out for?
So if you recall, I think last time we had conveyed, because you are comparing with March number, balance sheet numbers are given every quarter. So in March, US receivables were high because of at that time some disruption in collection, etc., which I think we had got collected everything by April, and we had made a mention some in June call. I think we have been good at our receivables and inventory, back to the standard days.
So it is going to remain at the current level in that case.
So there will be a change in working capital profile once the new plants start getting operational, the launch inventories start getting built, and so on and so forth. But so far, till that, I think we will be stable.
Right. And sir, last one from my end. So we have actually been calling out for LE or R&D expenses as well as the operating expenses every quarter. So can you share for this quarter as well?
No, I didn't get you. I mean, I think all our R&D expenses are expensed out, even from the facilities, new facilities, whatever exhibit batches, etc. we are taking, that is being expensed out.
Even LEOs?
LEO is getting... can you take it from Mitanshu offline?
Sure. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Kunal Mehta from Vallum Capital. Please go ahead.
So thank you very much for the opportunity and congratulations for a very strong quarter. Sir, I had a single question. I'm sure this guidance for FY21 and 22 sorts a lot of doubts which we had regarding the earnings and the sustainability of earnings for the next 2 years. So just moving out and just wanted to understand from Pranav. So sir, how do we look at the? So now we have built 4 plants. One is the oral solid plant at Jarod. Then you have the injectable plant. You have the onco injectable plant, and you have your LER facility, the topical plant. So just wanted to understand how should, as just from a framework perspective, how do we see the utilization of these plants going up starting from FY22 once the Jarod facility would be operational, and So how do we see the utilization building up? Any perspective on this would be helpful. And I'm sure it's difficult for you to predict also because it's something related to regulatory approvals and how everything will play out on the approval side. But as a framework, how do you see the utilization building up over the next starting from FY22?
So the Alio plant is already commercialized, right? So that's already got some products, and as we get more and more approvals, that you'll see more coming from the plant. The Jarod OSD facility that we're waiting FDA to do either online or a physical audit. The general injectables, which is the largest of the plants, that will also we're waiting FDA. Those products have been filed already. So it's, I think, over the next year or so we'll see. It really depends on the regulatory, so it's very tough for me to say. But when they come, and once they come, then hopefully we'll start seeing a build-up and launches coming because filings are in place for all these facilities.
Sure, and I'll sure understood. And sir, just on this one, so in terms of the assets which would quickly be utilized, where the utilization would ramp up very quickly, if you could rank it in order of where you would have expected to happen the fastest and the where you would expect it to happen in a larger time frame. So would it be fair to say that Jarod would be the fastest to be utilized, and so then following the injectable plants and then the Alio plant, or how do you rank it? So, and in what time frame do you expect?
It's tough to say that, but see, okay, I'll explain. Jarod is easiest because we already have a massive pipeline of OSDs. So once approval is there, then we can always shift products there. So Jarod is the easiest to do. In terms of future and growth opportunities, I think the general injectables is the most exciting because a lot of interesting products and a lot of filings are there. The Onco is a little more long term because a lot of the Onco products are in T-1, so there will be some time till it gets approved. And Alio, it's already started commercializing. So as and when the approvals come, we'll see more of it.
Sure. And just final question from me. And the cost structure for the rest of the business remains in line with what it will be. I mean, we don't expect. So all of the so the earnings estimates are factoring in all of these changes in the cost structure as well. Once we end the COVID and the expenses on the India side also build up to some extent.
Obviously, I'll not give you a number without factoring all of that.
Sure, sir. Thank you very much, sir, and congratulations for a very strong quarter. Thank you.
Thank you.
Thank you. The next question is from the line of Vishal Manchala from Nirmal Bang. Please go ahead.
Thanks for the opportunity. I just wanted to check with respect to umbralisib. Do we anticipate any milestone income upon approval? So basically, whatever Ryzen gets, would Alembic be booking that in the P&L?
Yeah, Pranav, I'll take this. So in the past also we have got milestones, meaning Ryzen had got milestones, but actually that got refunded back to APL against our investments which we did in Ryzen. So now our investments have been repaid, and now whatever milestones are received by Ryzen, to the extent that they need for their future development, they will retain. The balance they will distribute to the partners.
So basically, whenever there is an approval for the compound and the indication it has been filed for, obviously there would be a regulatory milestone to that, and probably that would happen around FY22 time frame. So are we factoring in that income into our estimates for FY22?
I don't wish to get into each of these items. I mean, something can happen, something may not happen. We give you a very broad understanding of our business, and I think you should be at this moment satisfied. I mean, as we come along, we pass some more time, probably we can discuss more.
Okay.
At this moment, I don't wish to elaborate any further.
Right, sir. So just one more. On the API and the rest of world business, how much would the growth be coming from azithromycin?
Not very clear, sir. Please
yeah.
request you to use the handset mode while speaking.
Hello. Is this better?
Ishan, your voice is not very clearly audible.
Am I better now?
Just put in the last question.
Yeah. So on the API and the on the growth in API business and the rest of world business, would azithromycin be a large contributor to this growth that we are seeing in the first and second quarter? And if at all it is, then can this growth recur in the future, basically?
So I didn't get you because I think you were breaking up, but I think you mentioned whether azithromycin is part of the ROW and API growth.
Yes,
ROW, azithromycin, no. But API, yes, azithromycin is an API that we manufacture, and we've got customers who've been buying with us. So I think it's sustainable going forward. As regards ROW, it doesn't have anything to do with azithromycin. It's just a regular portfolio that we serve.
Okay. And sir, could you give some details on the ROW growth? How that can shape up, and what would be the drivers there?
Sorry to interrupt, but your questions are not audible. Requesting you to please rejoin from a different number, and you can come back in the question queue. Thank you so much. The next question is from the line of...
Also, may I request the participants to restrict their questions to 2 because we are running out of time. We still have some questions in the queue.
Sure. Next question is from the line of Dinesh Pathak from Goldman Sachs. Please go ahead.
Yeah, thank you for the opportunity. First question, on this 450 crore of cost that will hit the P&L, this is including depreciation also, right?
Yeah, that's right.
Is there a breakup available, or this is just the number that you're sharing, right?
Then you can ask for a plant-wise breakup. Then I think this gives you a broad number for all the 3 new plants together.
Correct. So just to okay, that's fine. But just to clear my understanding, so in FY22, once we have this 450 crore, there is no capitalization of any cost that will happen, right, in FY22 then?
That's right.
Okay. And the capex, if you can just refresh the FY21 and 22 numbers, if you find them.
Yeah, I think it's part of opening statement. It will be on our website. 22 number, of course, we have not discussed.
Okay. Okay, sir. Thank you.
Thanks.
Thank you. The next question is from the line of Sameer Deshpande from Fair Deal Investment. Please go ahead.
Hello. Most of my questions have been answered. Thank you.
Thank you. The next question is from the line of Milind Karnatkar from Dalal & Broacha. Please go ahead.
Well, congratulations on a great set of numbers, but my questions have been answered. Thank you.
Thank you. The next question is from the line of Tushar from Motilal Oswal. Please go ahead.
Yeah, good evening, everyone. Just one question from my end. In the ROW market, if you could just broadly break down...
I am so sorry to interrupt, but your audio...
Am I audible now?
Sir, we are unable to hear you well.
Am I audible now?
Sir, no. Questions are not audible.
Hello? Yeah, am I audible now?
Sir, I'm sorry, your audio is not audible. If you can hear us, please dial in from a different number and you can rejoin the question queue for your questions. Thank you. The next question is from the line of Tarang Agarwal from Old Bridge Capital. Please go ahead.
Hi, good evening and congratulations for a great set of numbers. Just wanted to ask, of your current, H1 FY21 revenues of 1,200 odd crores from North America, what percentage would be from injectables?
Can you repeat your question, please? We didn't get you.
Of your current revenue in North America generics, what percentage would be from injectables?
Amita, try to get you. No, we
haven't given a guidance. We haven't given a guidance of the percentage of revenue that is coming from either of the segments. So.
Oh, so you're not okay. Fair enough. And just out of your pending 85 ANDAs, how many would be injectables?
Again, we haven't given a breakup of the filings according to our dosage forms as well.
Okay. Thank you.
Thank you. The next question is from the line of Mukesh Prajapati, individual investor. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. My most of question has been answered, but even though, can you throw some color on the domestic business and specifically in chronic segment? That would be a good help, sir, for domestic business.
Yeah. So the domestic business, like I said, it's I think all our chronic business, especially cardio-diabeto, gastro, gynecology, urology, nephrology has done well. Our growth has been largely in line with the market growth pretty much. Like I said, going forward, we expect all these segments for growth to get better. And as I said in my opening statement, where we are today, I personally see I see enough scope why we cannot increase our performance to surpass the market growth in the chronic segments. And that is what we're working towards. And that this is based on our portfolio of products, the way we are seeing traction, how we're seeing business unfold, how competition is unfolding. And based on that, my objective is to drive, better than market growth consistently quarter on quarter, as we keep moving forward, over the next year. That's what that's what we're working towards.
Right, sir. Because so many things happening in chronic segment that some SGL2 coming out of patent, even DPP4 is coming out of patent.
Yes.
So Indian market is gearing up for all these off-patent products, and I think patient is going to get affordable medicine from good company like Alembic. I think that's going to be very interesting in coming days.
Yeah. Yep. Sorry. Yeah. So we have also launched a new DPP4 that everyone has launched to be launched. So we're pretty much geared up and organized to launch all the new SGLTs and the DPP4s. Also, a lot of other smaller niche cardio products are going off patent. So we are in the process of launching. We have launched whatever is expired, and going forward, we have planned to launch, more as they are going off patent. So I agree.
Yeah. Any for prediction for growth for next year for the chronic segment?
I think, like I said, we'll grow in line with the market growth, and with the chronic, we want to try to outgrow the market growth numbers. So that's the only guidance I can give.
Okay. Thank you very much. Yeah. Thanks.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thank you. Good evening. One clarity on the guidance actually, but just trying to understand. So fiscal 22, we get additional expenses of about 450 crores.
Would you repeat your question, please, Anubhav? We didn't clearly understand.
Sure. I'm just moving to better area. Okay. So I was just saying, just asking for the guidance. When we do this guidance for fiscal 22, with additional expenses of 450 crores, this is on a tax-adjusted EPS is about $20. So if $20 were not there, effectively we are guiding that if these expenses were not there, we would have done an EPS of $70, right? That's what to understand? Or is it that the 450 crore expenses will not fully come in fiscal 22 or only part of it will come in?
So exactly, I don't know how much of this will be coming. I'm factoring 450 full, assuming all the plants start operating in the first half or first quarter of 21-22. But as I said, it will depend on the FDA inspections, approvals, and the NDA approvals.
So we should be safe in assuming that full 450 crore expenses may not come in fiscal 22. Otherwise, what's happening is, if I assume that, then
if they come, I'll be happy if they come. I want the plants to start running.
No, actually, I'm just trying to understand it a little better in the sense that if we assume full expenses, then it's an increase that we do 60 rupees EPS this year and then we're guiding to 70 rupees next year, which is a very good growth of 16-17%. And despite the good support we had on the API and on the US base this year. That's what I was just trying to understand.
Yeah, go ahead. Next. It's an observation you are making, so I don't have to respond. Yeah, go ahead.
Sure.
Next, anything else, Anubhav?
Yes. On the API business, I had a question.
Sure.
So in the quarter one, generally for the sector, we saw that most companies saw that same customers were buying more, the same number of products as the customers were stocking up more on the inventory side. You had benefits also. Additionally, azithromycin was extra benefit to our company. But in general, what's the trend that you're seeing now?
have the customer inventory levels largely been same, your observations for the industry, or it's come down, or the growth momentum that you're maintaining is largely coming from new set of customers?
So what happens is during that time we saw, yes, azithromycin was one molecule where there was a lot of demand, so that was some demand that came in. As regards other products, we've been constrained with API supply in the past. So it's pretty much most of the business is all sustainable. Yes, there may be some peaks, but now it's a little more normalized. Moving forward, whatever business we picked up will continue because we're supplying to all regulated market. We're not supplying to the non-regulated market. Hence, for someone to make a API switch also is a little tedious. So the business will stay and it will continue growing, in my opinion.
Okay, sure. And Pranav, just some clarity on this. So on the inventory level of the customer, have you seen any change or no change? The customer inventory levels are largely similar to what?
No, I haven't seen any change there.
Thank you very much for your.
Thank you. The next question is from the line of Abdul Puranwala from Analysts Securities. Please go ahead.
Hello, am I audible?
Yes, sir, you are. Please go ahead.
Yeah, so my first question is related to debt. So, through the QIP, we have, though we have paid most of the debt, and from next year we are guiding that there will be some additional expenses, or what we are capitalizing right now. So, sir, how do we see this debt figure going up starting next year? Do we remain confident that most of these additional expenses or the expenses for the new plant will be largely paid off through internal accruals, or we might have to raise a certain amount of debt in the future?
So, look, at the time of QIP, we have said that the QIP proceeds will be used for repayment of debt as well as for funding growth opportunities. So, obviously, for the CapExes, the current year and the next year will be funded by part of these proceeds. Of course, you can't keep money idle, so we have repaid borrowings ahead of time in some cases. And if need be, we can borrow again. But for meeting the additional expenses, I don't think we'll need additional borrowing. Obviously, since I'm giving a guidance, obviously the expenses will be made out of the earnings.
Sure, sir. And so my second question is more related to this 450 crores of savings. So, sir, as discussed by earlier participant, this amounts to close to an EPS of additional cost of close to 18 to 20 rupees. So, sir, what I want to basically understand is what is the driver which could boost some amount of growth in FY22. Would this be largely a function of the top line growth, or we see margins moving ahead from the 30% level what we are currently clocking in?
No, I think we are already at a pretty healthy margin levels. So the growth has to come out of higher business, higher revenues.
Sure, sir. Understood. That would be all from my end. Thank you.
Thank you.
I fear that people who have put in repeat questions, I may not be able to take them now because we would be running out of time. And they are most welcome to write to us. You can send your mail and we'll be happy to respond. We'll take a couple of more questions and then we'll have to wind it up if you permit. So take a couple of questions, ma'am, and then we can announce closure.
Sure, sir. The next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Well, sir, thanks for taking my question and congratulations on a pretty good set of numbers. So, Mr. Bedi, after we've had a very solid cash flow generation in the first half, plus we've got the QIP proceeds coming through, so the financial capacity of the firm is significantly enhanced. So how should we, any thoughts on how do we propose to utilize the same for growth purposes going forward? Are there opportunities to grow, and what kind of opportunities, at a broader level can one look at, given our financial situation now?
Pranav, would you respond, please? Hello? Pranav, you are there?
Mr. Pranav.
Yeah, I can.
Nitin, would you?
I didn't get that. Can you just repeat? I'm just on another line.
Nitin, can you repeat the question, please?
Yeah. So basically, the point I was trying to ask is, with after the cash flow generation which you've had in H1 plus the QIP proceeds, financially we are in a very solid position right now in terms of the capacity to invest back into the business. And so, any thoughts on what kind of opportunities does it offer us, and what kind of opportunities does it enable us to leverage going forward? Is it going to be more generics, more generic, sort of domains, or are there new verticals like specialty and all that? How should one, think about your ability to utilize this job?
Yeah, so our business is pretty much only generics right now, and one of the reasons for the new investments is to get new capabilities, right? So new capabilities that we're going to get is injectables, derm, onco injectables. That's the new capabilities that will be coming up in the future. That's where we're seeing growth from FY22, 23, 24. A lot of this will come from that, from the newer capabilities. Whereas right now, it's what we're doing is only the regular generics OSD, which is our current business. So that if that answers the question, you'll see more towards injectables and derm and ophthalmic in the future as well.
No, Pranav, my question is, I think this is you've already made this hard work in terms of the hard investments which are required for some of these capabilities. Where do we go from there on in terms of with the financial capability that we have? Are we thinking about incremental, opportunities for the business or in incremental domains, or this balance sheet just continues to remain strong and just become stronger as we go through it?
Yeah, no, it's a good question, and I've said that in the generic space, once you achieve a threshold, going up to what 500, 600 million is it's easy and it's possible. We're also seeing envisioning that. Moving forward after that, it gets a little harder, and we've seen that with some of our peers in the industry. So we do have thoughts around what we want to do. It's still early days. I still see another 4-5 years where this will continue. So we do have thoughts around it, and we're trying to see what are areas that we do want to get into. There are some areas that we definitely don't want to get into. That is biosimilars, and investment required is very high at this stage. Biologics as well. But we're evaluating other opportunities, and we slowly start investing in those once in another year or 2 months these are all stabilized.
Okay. Thanks, and best of luck.
Thank you. The next question is from the line of Saion Mukherjee from Nomura. Please go ahead.
Yeah, so thanks for taking the question. So just some quick questions on the cost structure. How much, particularly in the domestic market, how much of the costs have already come back, and on a sustainable basis, do you see it settling at a lower level, and any estimates that you have for that? And the second would be on the raw material side, any trend that you would like to highlight?
Shaunak, you take it, you want me to do this? Shaunak?
Mr. Shaunak,
you can take it. My line is, you can take it. My line is not so good.
Okay. So, yes, so I think you can treat Q2 as a very representative quarter, though in early part of Q2, still the field activities were a little restricted, where we had used more of digital means. But I think in second half of Q2, probably activities had picked up. So as far as our expenses are concerned, I think Q2 was a fairly representative number. And going forward, of course, we'll keep getting best efficiencies out of expense. So that's always the case for the company. As far as material is concerned, I think material costs are now back to, as a percentage of business, back to pre-COVID levels.
Okay, thank you.
So the temporary spurt which we had seen in API prices have, I think, stabilized, come down, or whatever. It's not much of impact now.
Okay.
Except, there will be some odd APIs where costs are still high, but it's okay. That's part of life.
Mr. Mukherjee, does that answer your question?
Yeah, I'm done. Thanks.
Thank you.
Thanks.
Well, ladies and gentlemen, we take that as the last question for today. I would now like to hand the conference over to Mr. R.K. Baheti, Director Finance and CFO, for his closing comments.
Thank you very much. My apologies for not being able to take all the pending questions. Most of them were repeat, and because we were running out of time. Thank you for your active participation. I reiterate that you can always write to us, and we'll be happy to respond. And a very good evening to all of you. Thank you very much once again for joining the call, and stay safe. And this is also an occasion for me to wish all of you a very happy festival season, a happy Durga Puja and Diwali. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals Limited, that concludes this conference. Thank you all for joining. You may now disconnect your lines.